Have you ever thought you could start investing with just $100 or less? Welcome, friends, to a journey of financial enlightenment where we'll explore the power of investing, no matter how small the amount. Many of us are under the impression that to enter the world of investing, you need to have a hefty amount of money stashed away. But that's not the case. The beauty of investing lies in its accessibility. It's not a club exclusive to the rich or the finance savvy. It's a world open to anyone willing to take calculated risks to grow their wealth, even if it's with as little as $100. This misconception that investing requires large sums of money often discourages many potential investors from taking their first step. But here's the truth. Investing is not about how much you have, but how smart you are with what you have. So, let's debunk this myth and guide you on how to start investing with just $100 or less. Firstly, you need to have the right mindset. Investing isn't about getting rich overnight. Now let's delve deeper into this. Investing is not a sprint, it's more of a marathon. It requires patience. Think about the seed of a tree. That tiny seed doesn't transform into a towering tree overnight. It takes time, and the same principle applies to investing. Your small investment today may not immediately become a fortune, but give it time, nurture it with patience, and watch it grow. But patience alone is not enough. Investing is not a risk-free journey. There will be highs and lows. There will be moments of euphoria and moments of panic. This is where risk tolerance comes in. It's about understanding your capacity to endure financial loss. It's about knowing when to hold on and when to let go. It's about accepting the fact that the market is unpredictable and volatile. To be a successful investor, you have to be comfortable with taking calculated risks. Now let's talk about long-term planning. Investing is not about making a quick buck. It's about planning for your future. It's about setting clear financial goals and working towards them. Whether it's saving for retirement, buying a house, or funding your child's education, having a clear vision of what you want to achieve with your investments is crucial. It helps you make informed decisions and keeps you focused on the bigger picture. Investing is also about continuous learning. The financial landscape is dynamic and ever-changing. As an investor, you need to stay informed, stay curious, and be willing to adapt. It's about understanding that the investment journey is a continuous process of learning, growing, and evolving. And finally, investing is about discipline. It's about making consistent contributions to your investment, regardless of the market conditions. It's about sticking to your plan even when the going gets tough. With the right mindset, you are one step away from becoming an investor. It's about understanding that investing is not just about money. It's a journey of self-discovery, resilience, and personal growth. So, you have $100 to invest, but where should it go? Let's dive into the ocean of investment options. Our journey starts with stocks. These are essentially shares of a company that you can buy. When the company does well, your stock value goes up. But remember, if the company doesn't do so well, your stock value can decrease. Next, we have bonds. Think of bonds as an IOU. When you buy a bond, you're essentially lending your money to the issuer, like a government or corporation. In return, they promise to pay you back with interest after a certain period. Bonds are generally considered to be safer than stocks, but they also typically offer lower returns. Venturing further, we encounter mutual funds. These are a collection of stocks, bonds, and other securities. When you invest in a mutual fund, you're spreading your money across multiple investments. This diversification can help reduce risk, but it also means your returns are spread out. Our journey continues with exchange-traded funds, or ETFs. These are similar to mutual funds, but they can be bought and sold during the day like stocks. This flexibility can be appealing, but it also introduces the potential for more volatility. Lastly, we have robo-advisors. These are automated investment platforms that use algorithms to manage your portfolio. They're a great option for beginners because they require little to no investment knowledge and typically have low minimum investment requirements. So, there you have it. A brief overview of various investment options. Stocks, bonds, mutual funds, ETFs, and robo-advisors, each with its own set of benefits and risks. As we wrap up, there's one important thing to remember. Investing always carries risk. The value of your investments can go up, but it can also go down. It's crucial to do your homework and understand what you're getting into before diving in. Remember, each investment option has its own set of risks and rewards. Now you know where to invest, but how do you actually do it? Imagine investment platforms and brokers as the bridge linking you and your potential investments. These platforms are essentially the marketplace where you buy and sell your investments. But not all platforms are created equal, and choosing the right one can be a bit like finding a needle in a haystack. So, let's break it down. First, consider the fees. Every platform charges for its services, but the amount can vary widely. Some charge a flat fee per transaction, others a percentage of your investment. Some even offer a combination of both. It's crucial to understand these costs, as they can eat into your returns. Next, take a look at the user interface. Is it easy to navigate? Does it provide you with the information you need in a clear, concise manner? Remember, this is where you'll be managing your investments, so it needs to be user-friendly. Then, consider customer service. If you run into any issues or have questions, you'll want to know there's a responsive and knowledgeable team ready to assist you. Check out platform reviews or ask around in investment forums to get a feeling for the quality of customer service. Finally, think about accessibility. Can you access the platform from your phone as well as your computer? Does it offer features like automatic investments or alerts? These might not seem vital at first, but as you become more involved with your investments, you'll appreciate the convenience. Remember, the right platform for you depends on your personal needs and circumstances. Are you a frequent trader or a long-term investor? Do you prefer to be hands-on, or would you rather set and forget? Understanding your investing style will guide you in choosing the right platform. Choosing the right platform can make your investment journey a lot easier. It's worth taking the time to research and find the one that suits you best. After all, this is about your money and your future. You want to make sure you're in good hands. It's time to make your first investment. Exciting, isn't it? Now let's dive into the nitty-gritty of how to turn your hard-earned cash into potentially profitable investments. First things first, you'll need to set up an account on your chosen investment platform. This process can vary from platform to platform, but generally it's a straightforward affair. You'll provide some basic personal information, set up a secure password, and voila, your account is ready to go. Once your account is up and running, it's time to deposit some money. This is where our $100 comes into play. You might be worried that $100 isn't enough to make a significant investment, but let me assure you, it's a great place to start. Every grand investment journey begins with a single step, and this is yours. Now comes the fun part, buying your first investment. You've done your research, you've chosen your platform, and you've got your $100 at the ready. What's next? You're going to navigate to the buy section of your platform. Search for your chosen investment, whether it's a stock, a bond, or a mutual fund, and click on Buy. It's as simple as online shopping, but with a potential return on your spend. Here's a pro tip. Don't get too caught up in the moment and spend all your money in one go. Consider dividing your investment into smaller chunks. This strategy, known as dollar cost averaging, can help minimize the impact of market volatility on your investment. Finally, I want to emphasize the importance of regular investing. Consistency is key in the world of investing. Even if you're only able to invest small amounts regularly, over time, those small investments can grow into a substantial sum. It's not about how much you invest, but how often and how consistently you do it. Congratulations, you've made your first investment. But remember, this is just the beginning. The world of investing is vast and ever-changing. There's always something new to learn, a new opportunity to seize. So keep your eyes open, your mind curious, and your spirit adventurous. Happy investing. So what have we learned today? We've journeyed through the empowering concept that even with just $100, the potential for financial growth is truly within reach. We've underscored the importance of the right mindset for investing, that it isn't about quick riches, but rather long-term financial stability and growth. We've explored the world of investment options, understanding that there's a multitude of ways to invest, each with its own set of benefits and risks. From stocks and bonds to mutual funds and ETFs, the choices are vast and varied. We've also navigated the process of choosing the right investment platform, emphasizing the significance of user-friendliness, support, and fees in our decision-making. Lastly, we've taken that exciting leap into making our first investment. We've shown that it's not about how much you start with, but rather the consistency and discipline to keep going. Investing is a journey, not a destination. Start today, no matter how small, and watch your wealth grow over time.